Assalamualaikum and greetings to Madam and everyone. Today, I will present about the investment toolbox for Malaysians. We will look into 3 chapters, which are Chapter 1, the mindset and goals of an investor, Chapter 2, about tools provided by the market, and Chapter 3, regarding tools inside the box, investment instrument. Chapter 1 focuses on the mindset and goals of an investor. It explains that successful investing requires understanding the basics, doing proper research, and relying on solid information rather than emotions. The chapter highlights 3 main investment goals. Capital appreciation aims to increase the value of the initial investment over time, often through long-term stock holding. Current income focuses on generating steady cash flow from investments like high dividend stocks and highly rated bonds. Portfolio diversification spreads investment across different assets to reduce risk and achieve more stable returns. The chapter also outlines key aspects of a strong investor mindset, including continuous learning, long-term thinking, emotional discipline, setting clear goals, focusing on the process, and managing risk through diversification. Finally, it introduces the risk-return concept, showing that higher potential returns usually come with higher risk, while lower risk often produce lower returns. Chapter 2 explains the tools provided by the market platforms, institutions, and services that help investors trade, invest, and raise funds safely and efficiently. It begins with Bursa Malaysia, the country's main stock exchange, which offers a wide range of listed products and ensures transparency and strong governance. Next, the chapter covers trading platforms where investors buy and sell shares. These platforms connect investors to Bursa Malaysia, provide real-time prices, and support activities in both primary and secondary markets. These securities commissions play a crucial role by enforcing rules, supervising market institutions, and ensuring companies follow proper disclosure standards. Finally, the chapter highlights the role of brokers who execute trades for clients, offer market advice, or make decisions on behalf of investors depending on the service type. Together, these tools create a structured, transparent system that supports the functioning of the Malaysian capital market. Chapter 3 introduces real assets, tangible items that hold value because of their physical nature. These include things like land, buildings, machinery, infrastructure, and commodities. Land is the simplest real asset used for building or farming, and it often grows in value because there's only so much of it. Real estate includes home, office, and apartments, places where people live and work. These properties can earn rental income and usually appreciate over time. Machinery refers to equipment that helps business operate, such as factory machines or heavy tools, making them valuable for production. Infrastructure includes large systems like roads, power plants, and transportation networks that keep economies running. Lastly, commodities are raw materials like gold, oil, and wheat are used for consumption and industrial needs. Their value is driven by global supply and demand. Together, these real assets serve as important investment tools that help generate income, support economic growth, and preserve long-term wealth. In this section of Chapter 3, we explore financial assets, which are non-physical instruments that companies or governments issue to raise money. These assets are highly liquid and represented by certificates. The first tool is bonds, which pay fixed interest and return the investor's money at maturity, offering steady and predictable income. Next are preferred stocks, a hybrid security that provides fixed dividend payments and priority over common stockholders, making them a lower-risk income option. Common stocks represent ownership in a company, giving investors voting right and the potential for higher long-term returns. T-bills or treasury bills are short-term government securities that mature quickly and offer safe, low-risk returns. Finally, derivatives are contracts whose value comes from other assets, like stocks or commodities, and they help investors manage risk or pursue higher profit. Together, these financial tools help investors grow wealth and manage risk efficiently. That's all. Thank you.